Hello, everyone. So, thank you so much. This is the fifth session in our How to Launch a B2B Startup Virtual Summit. Would have done it in person, maybe, I don't know, maybe hybrid later on, but of course, we're here online. I'm super excited to be joined by some friends, and I gotta say, some of the best in the world here. Some of the accomplishments that you've been able to achieve here on this panel is just absolutely amazing. Folks, if you have any questions, go ahead and click on the Ask a Question button here at the bottom or comment in the comment wall. We'll go ahead and get started. And Chris, why don't you kick it off here? Tell us a little bit about your background. How'd you become a serial founder who's now changing the ed tech world? And shout out from Miami, I just got to say.
Hey, everyone. From Miami originally. Parents are from Honduras. I benefited from high quality early childhood education, moved to the Bay Area, realized there was a shortage and thought about, how to potentially solve it. So actually started a childcare program with a woman, helped her start one out of her own home, and learned a lot from that process and gone to, build a marketplace supporting folks in starting and operating childcare programs and helping parents find them. So really excited to be here.
And before that, you were early in social commerce. You were too early, actually,
Yeah.
but an innovator in that. Whitney, why don't you tell us a little bit about yourself and how'd you get into this crazy world?
Yeah. So my background actually started in early stage go-to-market with startups. So first company I joined was around 50, 60 people at the time. And the next ones, kind of went from 10 and then up to 100 and then back down to 11 and then up to 100. My background is really in early stage go-to-market. I was a four-time VP of sales, have 4 companies on the Inc. 5000 fastest growing companies list. I've been through 1 IPO, 4 acquisitions. Then I transitioned into B2B SaaS Accelerator, where I ran, and I was the second partner to join. And I ran the program for about 4 years out of San Francisco, invested in, we're now at around 150 companies. From the pre-seed to seed stage. And I do a lot of advising on the side, specifically around go-to-market for early stage startups. Our company is called Acceleprise, for those people who are interested.
Awesome. Drum roll for my man, TK, who's in Dallas, Texas right now. I got to say, I love TK tremendously, such a brilliant mind. He also built a company called ToutApp, which was one of the earliest sales tech companies in this sort of new world of sales tech, sold it to Marketo, then got over to Adobe. I don't want to steal too much of your thunder, but I'm a fan too. Why don't you tell us a little bit about yourself?
I love you just as much, man. Thanks for having me. Just quick background on me. I started a company called ToutApp. We started the sales engagement space. We're backed by Andreessen Horowitz and a few others. We sold it to Marketo. I then served as SVP of strategy at Marketo. We did a 2-year transformation and then sold it to Adobe. Now I run a YouTube channel purely on how to grow SaaS businesses. Everything from fundraising to go-to-market to how to hire a VP. So I spend most of my time there, and I also run an accelerator along the side for people that watch the YouTube channel and then join us. We have about 50 founders on the program. And we focus primarily on how to help you grow faster.
Awesome. There's a question that came in here. Maybe we'll deviate from the, I know the agenda we had earlier, but I think this is kind of an interesting thing, which is, what are 3 must-have things when going to an angel investor to raise seed capital? And what are the most frequent uses for seed capital? TK, since you had the mic, why don't you kick that off?
Yeah, I think that for angel investors, the most relevant thing to really have, you want to find angel investors that have already been in your space, either have built a company serving the same market, has worked with the same type of technology, and kind of understands the type of sales motion or marketing motion you have. Those are those commonalities are really where angel investors should come in. if you're trying to convince the angel investor on your problem or the TAM or anything like that, you're talking to the wrong person. So I think that's probably the most important thing to have. And the way I think about it, and this is a constantly moving target and it varies from investor to investor, angel investors are investing in you more than anything else and in their personal connection to you. Pre-seed is investing in you and your idea, and seed is investing in your product with some revenues, hopefully, to kind of go a little bit faster. And then Series A, just to kind of round it out, I think of as they look at the quality of revenue, and if the quality is great, then they'll invest in you. And that's kind of how the whole gamut runs, in my opinion.
Great. Awesome. Thank you, TK. Chris, what's your take? I know you've done this a couple of times now as CEO for consumer and B2B. What would you say?
In terms of the
Like
differences?
Like those three must-haves, or maybe 2 or 3 must-haves that you have to have when going in to talk to an angel investor to raise that capital. And then, like, what the hell do I use it for early on?
Yeah, a lot of it depends on like your relationship with the angel investor and sort of like your process. I think that if you're pitching a friend or you're pitching a friendly, they're usually just investing in you at the earliest of stages. And so, a lot of it is just letting them know that you're gonna start a company and you're planning to, and you want to go and talk to people who sort of already believe in you. But I think that that's the minority of people. I don't think a lot of people have like a network like that where they can just go and raise their angel round. And so when you're raising cold, a lot of it's like the story. A lot of it's the story, like why you're starting it, who the team is, and the market opportunity. I would say those are the 3 things, like at the earliest of stages. And then when you're raising, as TK mentioned, like a seed round, there's a much bigger emphasis on initial traction, even sometimes profitability, which is like pretty rare, but puts you in an even stronger position when you can go and raise your seed round that way.
And would you consider the pre-seed? I know everyone has slight sort of distinctions between these. Would you consider pre-seed in like the angel round? I mean, there's some more institutionalized organizations that are claiming pre-seed. I know that kind of varies.
I think they sort of like meld together. Like you can have angels up into your like Series B, really. But like when I think about like a pre-seed round, there's VCs who do pre-seed investments, and there's angels that are great for pre-seed, and same thing for the seed stage.
Whitney, you've been doing pre-seed. I know you've invested in quite a few companies. I guess from the other side of the table, what are 3 things ish that folks should be really approaching you with, or you're just kind of like, nah, I'll pass?
Yeah. So on the investment side, I'm also an active angel investor. So I invest outside our portfolio as well, because an accelerator isn't necessarily always a great fit. And then I also am a GP in our seed fund. So I see kind of the gamut of startups. And one of the things, for me, I think TK actually hit on a couple of the points for me. I am looking for either an understanding of the market specifically and the sales motions within those market. Within that market, for me specifically, I actually, the personal connection is a piece, but I want to understand that the founder has done the diligence to really understand their market and what the go-to-market function is going to look like. So they're going to have priorities around their spend. So especially at the pre-seed stage where the dollars are a bit tight, I need to understand that they know how to prioritize and have done the work behind that and really know which market they're going to focus on. Because if a founder's too scattered across the go-to-market or their customer base, they're going to have a really hard time getting off the ground in a core beachhead. And so I'm really going to dig in quite a bit to see how much they've de-risked about their business, even just in customer discovery. And then I also am an active angel investor. I like to be an active investor and advisor for the companies I work with. So I want to know that I can actually help that company. So that's something for me when I'm looking at a company. I want to know it's going to be one I'm interested in engaging with and supporting actively.
Got it. Chris, how do you know what to raise? Like I was talking to a CEO a couple months ago, and he was going through a process, and he was like, do I just raise like more of a seed? Or he had raised like $1 million probably a couple years ago it was, and so he's like, do I just keep adding to the seed and not really do or the like a much larger round? And he was like, or do I just go for it, especially in that, like in his space there were folks like Hopin that were raising $200 million without even being out of beta, which was insane. Like, how do I know how much to raise? Like, I know it's a deep
it's
question.
hard. It's hard. I think, and I think I probably, I think it's a philosophy thing. Like, I think folks will have different philosophies on how they go about it. My belief is raise more than you think you need, because you'll likely not hit those. It might be harder to hit those milestones than you think. That's one. Two, try not to raise a too high of a valuation, because it's, you can sort of just might make it harder to raise your next round. But I think in general, try to raise more than you think you'll need. Like you might put together like an Excel, like, oh, I'm going to hire 2 engineers and this and that. And like, it's going to take us 12 months and it's probably going to take you 3 years and, a couple of iterations to get to that next round. And so like, that's sort of like my principle.
I wanted to ask you something. Lately, we are hearing a lot about Miami, East Coast, West Coast. Do you find any regional differences between investors, especially West Coast and East Coast? What do they look for in each of the areas, or what they do prefer?
Is that a question for me or for all of us?
Chris.
I've never tried to raise in Miami before, and so I actually don't know. The last time we raised was like in 2018, so it's things have probably changed drastically. When I know that like New York investors tend to be a little bit different than SF investors, and then and like no offense to the investors on this call, but I sort of like operate with this idea that when there's not a lot of investors, especially pre-COVID, when there's not a lot of investors in a market, investors have a lot more power. So you get worse terms and it's harder to raise around. And so the Bay Area is like really great for fundraising because there's just so many investors, and like you can burn through poor pitches and eventually hit a good pitch and raise your round. Whereas and you can typically raise that round with a lot less traction because there's just so much more competition.
There's also, I was just going to add in here, there's also an element of pattern recognition that's built into a more mature market. So as the secondary markets we're seeing start to mature, the investors will also start to mature because they see more deal flow. And so that pattern recognition that gets built up around signaling of what a good founder is. Yes, there's the competition piece, so you get better valuations as a founder, but there's also the element of educating investors. So the more, sorry, my dog's in the background. The more founders that are out there pitching those investors, you're educating your own market. So it's really great for you, even though if you want to go raise in the Bay Area, totally fine, do it. But definitely go back, be pitching in your local market, even just to warm up the market, like warm up and work through your pitch if you're planning on going to the Bay.
I'm sure that's changed a lot now that since COVID, it's like, I mean, I don't know if I have no idea, but my guess is it's changing the way folks fundraise and how investors invest.
I mean, so many investors have moved. Like it's crazy.
Yeah, totally
moved.
Yeah. Well, our next panel is on Miami and Austin for those folks who are, interested in that. It's such a hot topic lately. TK, you've raised from some really prominent angels, Jason Kalkanis, Andreessen Horowitz, as we were talking about earlier. Shout out to Chris, also got some Mark and Ben money over there. But how do you do it? Like, what are some of the first sort of steps, and how do I know I got my pitch right for that, let's say, seed, right? Because I know that's different than Series A. You sort of spoke to kind of the elements, but how do I get started? How do I freaking fundraise?
Yeah, I think you can never really optimize for whether you get a tier 1 investor or a tier 2 investor or tier 3 or an amazing angel and there's really no correlation. Every single investor I've had has been helpful in their own means. There's angel investors that I got that no one's ever heard of, and they introduced me to incredible investors or made incredible connections. So the first thing I would say is I wouldn't get too fixated on the brand. Get fixated on the value and the terms and the person. That's one thing that's important. Like Josh Bear's in the chat right here, and I hunted him down in South by Southwest, and he saw me, and I was like, and at that time he only did email investments, and I was building an email company, and he was like, hey, my wife won't let me angel invest. I'm like, that's fine. Let me just show you the demo, and you don't have to angel invest. And then the next day I met him and showed him the demo, and he angel invested. So you just don't know, and he was incredibly helpful. So that's the first thing. I think in terms of fundraising, the other thing that a lot of first-time fundraisers don't understand is there's literally 2 modes to fundraising. One is where you're preparing to fundraise, and that could be an infinite amount of time. You could be doing that for months. You could be doing that for multiple years. But then there's the moment where you are fundraising. And that should be a very finite amount of time. That should be very well defined. You've prepared for it. You've built up to it. You've warmed the connections that you're going to have. And then you're going into that fundraising mode. Because typically what hurts founders a lot, in my opinion, is when, you meet them on like the 1st of January and they're like, we're fundraising. And then you meet them in the March 15th and they're like, we're fundraising. And you're like, what happened? And no one likes a stale deal. So what you want to make sure is think about your fundraising almost like a bank heist. And everyone's like, I love bank heist movies like Ocean's 11. Like they spend a lot of time scoping out the job and scoping out the people and mapping it out and saying, here are the key people. Here's how we're going to approach them. Then they spend a bunch of time doing trial runs. And then they go in and actually do the heist. And so thinking about that in very distinct stages and really running a tight loop around your fundraising process is super important. And I think a lot of first-time founders who are fundraising for the first time don't realize that.
Got it. Thank you, TK. That's awesome. Whitney, as an investor right now doing these seed and pre-seeds, what kind of like mechanism do you prefer at this point? I know, the last money I raised for my startup, we were doing safes, but convertible notes, I know were, always so exciting. What's the 2021 version of this? Maybe it's the same that investor.
We use YC's safe. It's a pretty easy standard safe. If you're dealing with a seed round or a larger seed round, you're usually going to have investors who actually put together terms if they're pricing the round. But we use a standard safe because we're usually not leading the round. Or invest on the other the terms that the previous investor has outlined. So convertible notes, I see much, much less frequently. You will see some pre-money, but most of it's post-money these days. And I would try and negotiate for post-money for the founders out there if you can. Some people who invest still try and do pre-money, but it's pretty standard to do post-money. So I would say it's, post money YC safe. It's pretty easy. It's there online. Everyone knows it. It's pretty straightforward and an easy way to go. And very rarely are you going to get a ton of negotiation around it if you're not dealing with a lead investor.
Is the post money thing a new thing, or is that how it's always been? Like newer. It's newer. I would say it's probably in the last 2 to 3 years. Huh.
Awesome. And I guess Chris, to kind of maybe take us home, Chris, and then we'll go to TK and then wrap up, get the other side's perspective. How the heck do you close this darn thing?
Oh man, closing. It's hard. It's and I'm doing like a lot of like enterprise sales right now, and it honestly feels very similar. Like, but pretty much, how do you close? Oh man, there's two ways. So one, you can get like a really hot deal, and so you want to like pitch a ton of people, and if you're able to get a number of term sheets, then you're fine, right? But then the alternative is that like, you know, you've pitched 40 people and you really haven't been able to get someone to give you a term sheet. And man, that is hard. The way I've done it is you just have to sell really hard. Like you essentially have to really figure out who's the ideal investor, make sure that you build a relationship with them and work really hard with them to get it across the line. I've actually, you know, sat down with VCs, gotten a no, try to understand why they said no, realized it was a partner on their team, got an introduction to the partner, sold that partner, and then got the deal done that way. So you sort of just have to, you know, figure it out if you're not getting to it. And I just think a lot of it's like persistence and just really understanding why you're getting no's and pivoting to get to that yes.
How do you know, real quick, how do you know that a no is a real no? I know that's something I always struggle with, because particularly because I pitched for like maybe 7 startups over the last 20 years, and I would hear the same things, and I'd look back, I'd go, hold on a second, but I plugged that hole. Like I have that thing here. You know what I mean? So how do you know it's real?
It's a
you can hear
no.
my emotion and cynicism.
Yeah, it's a no until it's like really obvious it's a yes. So like if you think it's a no, it's usually a no. If you're unsure, it's usually or
the reason no. I should say, not a, you know, like
the reason.
Yeah.
You know, you typically don't get it from the investor. I find that if I show my friends what's going on, who have raised rounds, they can usually like help you get to the reason. So like other founders, you know, maybe an investor will tell you, but like it's typically other founders who really help you see what the issue is.
Because the traction one is a funny one.
Every
right?
professional investor, it's in their best interest to never really give you a no. So you're never really going to get a no, because every investor is one deal away from redemption. So they always want to keep their options open. And truthfully, you know, you could spend 3 months hunkering down and really fixing some broken part of your business, which you probably know about anyway. And then you'll come back and no one wants to be the guy that said, I will never fund you. So they'll never tell you that. They'll never give you a good reason. And almost spending time on understanding the no is going to put you in the wrong direction. All you know is that the business is not ready to be funded. So you need to understand what's wrong with the business. And, you know, typically, you know, with B2B SaaS, it's a lot easier than, say, a B2C company. There's essentially 27 choke points that exist for a B2B SaaS business. That's pretty much it. And those 27 choke points, you can literally go down that list and start to understand where it sucks. And usually, number one is that they just don't believe in the market, like not yet. And like, for example, sales engagement. Like we started ToutApp as a sales engagement space. It was so hard to raise money on sales engagement. No one thought that VPs of sales have budget to do that. They're like, well, marketing automation kind of does this. And yet it's going to be a $5.5 billion market in the next 2 years, like literally with multiple unicorns in the space. So your best bet, if you're getting a bunch of no's, the question is, have you hit up everyone that you can possibly hit up? Or do you call the patient? At some point, you're going to have to call the patient and say, you know what? We need to go back. We need to go on a diet. We need to go fix whatever we need to do. And then we need to come back, and then they're going to love us. Like, go figure out what diet you need to go on. Other times, it's like you just haven't gone through enough. Like Robinhood went through something like 80 investors until someone got what they were doing and enough people invested. And now when you go back to those investors, now they're like, I knew all along. It's like, no, they got lucky. Like no one really knew. So I think it's really fundamentally like deep self-reflection is required for you to understand. Either you call the patient and you go back on a diet, or you make sure that you're getting enough numbers, because that's just the name of the game.
Awesome. TK, I got to say, the first time I heard your voice, I was sitting down with, or your name rather, I was sitting down with Dave McClure, pitching him FeedGen. He's like, Have you heard of Tout app? So you did it, brother. Brittany, let's wrap up with you here. Being on the other side of kind of the table here, what's your take on it?
Sorry, can you repeat the question?
Yeah, well, just kind of like, when how do you know, like, how do you, I guess, from an investor's perspective, what are you, or let me think how I can.
What do you wish founders did more of?
There you go. Yeah.
I got you, man.
I also coach founders on fundraising, so it's not just an investor side. I actually work with founders really closely as well around their fundraising. So, as an investor, I guess the things that I wish founders knew is one, like when you're. I focus really heavily on go-to-market. So I really want to know how much of a business is de-risked. And I want to understand how much the founder knows and what they don't know. And the more candid and honest they are with me, the better. The specific no piece, TK, again, 100% right. Like investors won't say no and they'll string founders along. The thing I wish a lot of founders knew was, you're going to be taking a ton of meetings and doing demand gen around those meetings. And sometimes your time is better spent doing demand gen around your business and growing the revenue of the business and coming back and fundraising. So do your pre-work and really understand if your business is ready for the fundraise before going out, because it's that much harder the next time you go out. And so take a couple meetings with friendly investors, really figure out where you need to be. Kind of find the correlations around that. And then before you fully go out, don't just go out because you want to go out or you're running low on cash, because the meetings could be spent on your go-to-market, and it takes just as much work sometimes to get the meeting with an investor. And so your time may be better spent trying to get the meeting with the customer and closing a couple big customers.
Awesome. Whitney, why don't you kick us off in our wrap up here today? If folks want to follow you on social media or maybe send you their deck to take a look at for angel investment or pre-seed, what are the best channels?
Yeah, so my email is whitney@acceleprise.vc. I'll share it in there. And then Twitter is thesalesmethod.com. It's my last name is Sales. It's as cheesy as they come, but
awesome.
It is true, actually.
I'm actually jealous.
I used Shout Out super early back in the day, by the way.
Oh, that's awesome.
Yeah.
Thank you for being an early customer then.
Yeah.
Do you get the cheesy joke of like, is your middle name marketing, or is that like totally off?
No, I get the cheesy joke, is your last name really sales? And it is, yes. But when I used to sell, it was the first buying signal I got from customers. If someone asked me if that was my last name.
That's awesome.
Nice. TK, how about yourself? If folks want to follow you, I know you have the YouTube content up.
Yeah, I run a YouTube channel. It's only about B2B SaaS. So feel free to go there. It's tkkader.com/YouTube. In the chat, I pasted a playlist. We have about 10 videos just on fundraising. We post an episode 3 times a week. So, and it's just me talking to you. So if you're in the very... Oop, there we go. So just go to tkkader.com/YouTube. You can follow me on Twitter. It's my middle name, so I'll include that as a link. And if you want to email me, I'm kind of behind on email, so don't email me. Literally just like hit me up on Twitter. That's going to be better.
Awesome. Chris, why don't you take us home here? Folks want to learn more about Wonderschool. I'm going to post the Twitter in the chat, but what are your preferred channels?
Oh, I'm on Twitter. My Twitter handle is Bennett, but the B is an 8. And so you can just find me there. And then if you want to email me, chris@wonderschool.com. And if you want to learn more about Wonderschool, just go to wonderschool.com.
Awesome. Thank you so much for taking the time. It's weird because usually I'd be out at a restaurant or something, but we're doing sales and SaaS and startup content. So thank you so much for your time. I know you're super busy. For everyone else, we're going to move to our final session. So I'm going to teleport you there. However, if you want to get there right now, just click on the schedule up top. It's going to be fun. We're going to be talking about the buzz around Miami and Austin and get some local opinions. Folks, I hope to see you in Dallas, TK. Chris, if you're home, hit me up. I'm on the beach now, so
Oh man,
you can crash here.
I'm jealous.
I got a place for you, man. Just let me know. Whitney, wonderful to see you. Maybe we can do some skiing in Tahoe.
Yeah, that'd be awesome.
Awesome. Have a great night. Thank you.
Thanks.
Okay.
Take care, everybody.